Ferenc has 10 years of experience working in banking on a large IT project for a major US company. He was an early adopter of Bloodhound and has been designing and building systems for customers since basically the beginning. Apart from running Remek, he is also a visiting lecturer at the Central European University, where he teaches trading strategy design in the Masters of Finance and Masters in Business Analytics programs. With that, Ferenc, feel free to unmute your microphone and we can get started.
Thank you, Keith, and it's a pleasure to be here. Let me just start sharing my screen. Welcome everyone to this session and to Shark Week 2022. And today I'd like to take you on a journey of discovery and maybe a new way of thinking that I think is crucial in trading, and for many traders it was the path to success, towards success. So I hope you find this somewhat valuable today, and it will also inspire you to think further and see what's the best way for you to turn your trading business into a success, which it deserves to be. So with that said, I'd like to start talking a little bit about how to think about risk and opportunity in trading, which is a little different than probably in normal life. And many things are different in trading than in normal life. And I'm sure we have all experienced the treacherous path along that road. So the agenda today quickly, first of all, I have these $2 coins there just to show you that risk and opportunity, the way I think they should be thought about in trading is just as two sides of the same coin. There's no risk without opportunity. There's no opportunity without risk. Risk is not a dirty word in any way. Risk is something that we welcome because that's the one that brings us the opportunities. So risk is here to be managed, to be assumed, taken on, and making sure in such a way that it has an edge, but more about that later. So let's see what we're going to talk about. In last year's presentation, if you go back to Shark Indicator's YouTube channel, you might find it there. I touched upon a couple of basic facts or foundational truths or topics in trading that I'd like to just go through quickly in 2-3 minutes. Again, if I may. That would be the start of this presentation. Then we'd be talking a little bit about risk in more specific terms and how to turn risk into opportunity, which is what we want to do. And last, I will show you a couple of products that we have designed that could help you to make it all happen. And then, of course, like every year, we'll have a little special coupon code for you in appreciation of your attendance and also of all the efforts that we traders put into this business on the markets. So let's start. The first thing that each of us, we have to decide why are we doing this? Is this a business or in some form, maybe even justified form, if I have the money to blow, whatever, it's just entertainment. So this goes for all of us, and that includes me as well. So we have to ask 4 questions, and we have to have these check marks. Otherwise, this is not going to work as a business. It could work as entertainment, but that's not the topic of today's conversation or presentation. So first of all, we need a written plan. Not everybody has it. I'm not saying that it's impossible to be successful without a written plan, but it makes life so much easier to crystallize our ideas and put it on paper or electronic form, whatever, and update it regularly. Markets change, conditions change, markets regime change. We all remember 2011 and previous years, the big bull market on the indexes now, since last November, we're struggling because it seems to be over. So things change, and the business plan must be a living document that guides our behavior, governs our behavior on the markets. And that's something that we always have to adhere to. All right, and then the next question is probably could be strange to some of us. It was for me first, which is that I can't be worried about my next trade. If I'm worried about my next trade, then I didn't do the math. It's so simple. I cannot be worried about the outcome of my next trade. So this check mark is definitely something that's a strong indication that this is being run as a business. Also, we're going to look at this in detail in a little Excel chart a little later, that I simply must know that when I trade my strategy, what's the maximum expected number of losers in a row? If I don't know that number, obviously I don't know what risk I'm running. And the other one is a psychological side of it, that I must be comfortable with that fact. So if I did my calculation and my Excel chart says sooner or later, if I do this long enough, I'm going to have 7 losers in a row. It's just a matter of time. I must be comfortable with that eventuality. If I'm not, then there is something wrong with the math, and we'll get to that later. And closely related to that, I cannot risk more of my account at any given time. If I have 1 trade on the market or 5 trades on the market at any given time, what matters is the cumulative risk that I'm taking at any moment. That must be a statistically safe amount of my account, of my capital. Otherwise, I'm going into the territory of gambling, which we do not want to do. So I hope you will agree to this, or at least give serious thought about these points. And maybe there's a 5th one, I don't know, possible, but these came to my mind as the most important ones. Also, if you don't have the 4 check marks here, you're probably trading, your trading is probably not a business. That's just the hard, cold truth of this all. So moving on, the next thing I'd like to highlight again, this has come up in the past. You might find this chart in other videos, but I just wanted to highlight this one more time quickly. And this is another foundational truth in the market. Understanding this, I think, for me anyway, it was the key. It was probably the one, if I just want to name one single event or realization at 3 a.m. in the morning, after, of course, reading 1,000 books about it and stuff, is summed up in this chart. So I would encourage you to spend a little time here, go through these little comments, but I'm going to give you a quick summary right here. All right, so what moves price? What moves price is the imbalance between basically buyers and sellers, or their motivation. There are imbalances in the market that will move price. Price will find a new balance for a while, and then something will happen and it will move again. So that's how it works. Okay, so we need imbalance. We welcome imbalances. But the problem is that when you look at the chart, or you could look at a data series, the tape or dome or whatever, the imbalances do not show. They certainly do not show on the chart. The imbalances would be this green circle. I just mark it. So this green circle is the imbalances in the market. And we need them and we welcome them. The problem is that you can't see the imbalances directly. What you can see is, of course, charts, or the movement of price on the chart. And what we can do is that we can analyze the movement of price on the charts, and we can discover or recognize patterns, repeating patterns, and we try to find patterns that could have or offer some profits for us. That's what we want to do. So there will be patterns on the chart, but I'd like to point out one fact here. If I may, I just want to jump on our website for 1 second. Let me show it to you. Now, the point here is that this is a totally random chart. This is a random chart generator. And what happens is that if I press F5 or refresh, reload the chart, there will be a new chart. And the interesting thing about this is that all the patterns, the pullbacks, the head and shoulders, or whatever you want to look for, support, resistance, they will all be here. You will find them all on a random chart. So what does that tell us? That tells us that a random process is quite capable of generating the patterns that we're looking for. Now, what does that mean? That means that when you see a pattern on the chart, let's say, I just see a pullback because that's what I'm into mostly. So let's say I see a pullback, beautiful pullback on the chart. There is no way of knowing if this is a result of a random data event, in which case there's no edge in there, or an actual imbalance of the market, in which case I'm very interested in trading it because that's where my profits will come from. There's no way of knowing. So please, if you worry about entering a trade, this is the first thing that you can think about. There's no reason to blame yourself if it's a loser because nobody knows the outcome of the trade. The only thing you have to worry about is following your plan. But if you followed the plan and it turned out to be a loser, who cares? And I'm saying who cares, assuming that we have done the math, and we're going to get to that. So as long as you've done the math, the outcome of the next trade is impossible to predict. It's not even important for us. We don't have to know to be successful. And that's a great relief psychologically. So I encourage you to give it a little thought and also the notes on this chart. I just want to make sure I didn't forget to mention anything. Right. And then I want to say something about the yellow area, which is, of course, the shared area between the patterns and the actual imbalances. So as you can see, this is just tries to show that there will be patterns on the chart which actually are a result of imbalances. Those are shown in yellow. Our purpose, of course, is to trade as much of the yellow area as possible. So trade and find and identify patterns which most likely are a result of a market imbalance. All right. The next thing that there's no escaping is that trading is a business of statistics. Luckily, not too difficult. Nothing really, I mean, high school math is much more difficult than what we're going to do here. And this is the little notation of the edge. The percentage of our winners multiplied by the average win plus the percentage of our losers multiplied by the average loss must be bigger than zero. Otherwise, mathematically, we're not going to make money. This is the edge. All right. So two scenarios. So if we don't have an edge, we have no reason to be on the market because we will lose our money sooner or faster or slower, whatever. It's a mathematical necessity. Think of it this way. Let's say we're going to start flipping coins. And flipping coins is, if it's a fair coin, it's 50-50. And I'm going to say, okay, well, let's play a game. If it's heads, I give you $1. If it's tails, you give me $1. And you would tell me, so it's a total waste of time. And you're right. However, if I change the game's rules, for example, like this, it's still 50-50. We're going to flip coins. But if it's heads, I give you 120. If it's tails, you give me $1. You would say, oh, I'd love to play that game forever. And you would be right, because that's what an edge is. What we want is to find an edge in the market. There are edges, not big, but they are there. And we have to identify them and teach ourselves to execute them. And that's how we can be successful on the markets. Otherwise, in this game of I give you 120, you give me $1, we're going to flip coin. Me losing is a mathematical necessity. So that's how the edge works. And the first exercise for each of us here is to make sure that we do have an edge. And I refer back to Jack Schwager. If we don't know what our edge is, if we can't say it in 2 minutes, explain it to a 10-year-old kid, then we don't have one. We're done with that part. So now we're going to assume that we have an edge, or we are working on identifying our edge. So if we have an edge, then we have to do some simple math, because having an edge is not enough. We have to make sure that, you see, the edge manifests itself over a large number of trades, of events. Like flipping a coin. Flipping it 3 times will not tell me anything. Flipping it 1,000 times will tell me if it's a fair coin or not a fair coin, perhaps. So any edge will come to surface over a large number of trades. Now, it comes from this fact that we have to stay in the game in order to manifest our edge. You just have to stay in the game. Our first goal is to stay in the game, which means that we have to define how much money we can safely risk within this confines of maximum expected losing streaks, which are an Excel chart will help us to figure out what that is. So there's 2 numbers we need to know. What is the maximum number of losers I must be ready to accept and expect in a row? And second, how much money can I risk at any time so that that fat tail event will not blow me out? You see, fat tail events do happen more frequently than we would like to think. They will happen. They will hit our account. We must be able to withstand that hit when that comes. So two things, the maximum number of losers, number of losers, right? That's the one number I need to know. And second, I need to find a way to figure out if that's the maximum number, okay, then how much can I risk on any one trade so that if this happens, I'm not blown out. Okay, so let's move on. So we're talking about trading as a business. The next thing I'd like to, and this is also part of the journey have the privilege of taking you on today, is to challenge you to think a little differently about risk. And just imagine that we run a flower shop, or that we're a taxi driver, or a friend of mine runs a restaurant. Okay, well, that friend, 7 p.m. the restaurant opens, 2 p.m. he goes to the market and buys the stuff. But he's not sweating about it. That's not really a risk for his restaurant. That's not something that he looks at as a risk. He looks at it as inventory. Same thing for a taxi driver. Is buying gas a risk? No, it's part of the business. It's overhead. Same thing for a flower shop. 4 a.m., I go out to the wholesale market. I buy my flowers. 10 a.m., I'll sell it to other people. Okay, I don't fret about 4 a.m. I fret about other things. So you have to start thinking of your losing trade as an overhead, as a cost of doing business, and an expected and pre-calculated cost of doing business, just like for the taxi driver and for the other guys who are business people as well. So we are here trying to think as a business person. That's the only way it's going to work. So a losing trade, I know it doesn't happen from 1 minute to the other, but if you work on it a little bit, spend a little time thinking about this and just train yourself to try to accept the fact that there's nothing to worry about a losing trade as long as you have done the math, very important. And as long as you have followed your business plan, your trading plan. All right, so a losing trade will become, after this transition or transformation of thinking, becomes like your data feed, or like, I don't know, buying NT8 or buying a product that you need for your trading. And it shouldn't even, cause emotions in your head, right? Why would I get emotional about CQG? I mean, I won't. It's just my data feed or my internet connection for that matter. I think starting to think about the losing trade, your next upcoming losing trade like this, takes a big burden upon your shoulders so you can devote your energies on more productive stuff. So as a business, we have business risks and we have outside risks or market risks we don't really have a control over, but we need to find a way to manage them nonetheless. Business risks. All right. Well, certainly lack of a written plan preferably is a big risk. The biggest risk is not having an edge. And there are some everyday risks, which will happen sooner or later. Just 2 weeks ago, I had no power for half a day. So loss of electricity. Imagine you're in a trade and you can't get to the chart. Like in the old days, we need to have the phone numbers ready right above the monitor. There needs to be a disaster recovery plan. But these events, if you notice, they're just events like a flower shop or a taxi driver mostly. It's just a business risk, which can be thought of and ways can be found, of course, to mitigate them. All right, now there's market risks. This is more related to trading itself. But if you note, a losing trade will not be on this list. Again, assuming that we have done the math. So correlation. The people who trade with me on Remek Premium, they know how we trade currencies and major pairs, fat tail events. We tend to dismiss events, potential events, which are very, very, very unlikely to happen. But listen to this, when they happen, they can blow us out. Now, those are the danger points. You have to think about fat tail events and you have to know what you're going to do when they happen. And you have to make sure that when they happen, or if they happen, rather when they happen, they will not blow our account out. Gaps is an important risk that we have to think about, and they will happen. Even on liquid markets. I'm not saying it's too often, but there was another one on Swiss franc, by the way. So on liquid currencies, it can happen as well. Very, very important to be mindful of that. Lock limits too. Just go back to the ZW chart, maybe a month ago it was. Okay, regulatory requirements, that could be anything. So if something changes in the law or financial regulations, we need to be aware of that. They do change sometimes. Not every change is really significant, but we need to be aware of that. And also, more importantly, probably that this happens much more often during the year, that our broker or the market itself, CME, changes the margin requirement. That could happen. I entered the trade when, I don't know, margin was like, I'm just saying a number, 5,000 on the Swiss franc. I wake up the next morning, margin is 10,000, and I need to put money on my account. What am I going to do if I don't have that money? So these are all risks, fat tail events that must be thought about. So I hope you're starting to see that a losing trade is the least of our problems here, really, especially if we have done, and only if we have done, the math. If, you see, if trading success starts when, or if the road to trading success starts when I don't look at a losing trade as a risk anymore, then what must be done so that it is not seen as a risk anymore? And the answer is right here. We have to do some math. And again, luckily, the math is not too complicated, and we have some very handy calculators. And there's a couple of calculators, well, 6 or 7. Please do check them out and see how they can help you and how they can help you develop this kind of thinking that we're talking about today. So it's remek.ca/calculators. Before we crunch the numbers, there is one fundamental hurdle that we as human beings, we must be aware of. And this goes back to maybe, well, thousands or tens of thousands of years. There's nothing we can do about it because this is how we are built. So how are we built? And why is trading such a big challenge? If I want to be a surgeon, I go to university. I'm not saying it's easy, but I can go to school and they teach me how to do it. If I want to be a pilot, okay, it's not easy, but I just have to pass the exams and I'll do it. Even learn a piano to some level, or tennis, or any skills. It's possible. Trading, most of us find that trading is a different animal. Trading is very, very hard. Why? Because unlike the other professions, trading is not like the life out there that we used to, and nothing works the way it works or we are used to doing in life. Now, what are those things? So these are two cavemen, right? Like the old us. Some noise coming from the bush. And one guy says, it's a tiger, and starts to run like hell. The other guy says, well, let's look at the data. This guy here. He's the Isaac Newton of the day. He's the genius. The other guy's dumb, but he's the one who's going to run without thinking. This guy starts running the math or the stats and say, well, I've been sitting here, we've been sitting here for 20 years every day, and we have seen 2 tigers over 20 years, but we have seen 10,000 birds. So I'm going to stay and finish my dinner. And of course, he can get lucky once or twice or 3 times, but the day will come when it will turn out to be a tiger, and chances are he will not pass on his genes. So we are descendants of this guy who ran. We are not built to think in probabilities. We are built to think in fight or flight, reflexes, and that's very useful in life. We are here. This guy is not here. We are here. We're the one who survived. But the problem is, on the market, we have to be like this guy. We have to run the stats. If we behave like this guy, and probably you have experienced the same thing many, many times, or years and years, I've been struggling with, I said, how come every day I just do exactly the wrong thing? I always do exactly what I shouldn't be doing, because we are human. So long story short, this fundamental hurdle, the ability to start thinking in probabilities, is a skill that takes time to develop. It goes against our nature. We're not very good at that. And this is the key to start looking at risk the proper way. Right, so we've been working hard for 10 years to design and produce products which are designed to help you in this challenging journey. And one type of product that we have is a full-blown trading system, as it were, is a trading office. We saved it as a workspace. There are some important parts of this, which the people who are with me on Remek, or who are our customers, they know exactly. This part here, highlighted by this red arrow, is the Market Scanner Pro, which in a objective fashion calculates values for us and potentially colored messages that will guide us to trade the right way, the right market at the right time in the right way. Other parts of the system, this is our Remek converter, which has the unique ability to convert risk into dollars. Risk into dollars, and not based on the tick side. A common misunderstanding, for example, let me just mention this. Let's say the NASDAQ, the NQ is $5 a tick. The ES is $12.50 a tick. And I used to think this for years and years. Well, it's more risky to trade the ES because the tick size is bigger. Well, it's not like that at all. Actually, if you think about it, or if you have tried, I think you will agree with me, it's much more risky to trade the NQ. Why? Because you have to think of this like let's say, two monkeys on a trampoline. One is a smaller monkey, and that is a larger monkey. Let's say the smaller monkey is the NQ because that's only $5 a tick. The other one is a $12.50, the ES. Yes, but then I find is that the smaller monkey tends to jump much bigger, and the larger monkey just jumps smaller distances. So tick size is not really not the best way to measure risk. We have to think in either standard deviation or ATRs, and more about, they can find a lot of stuff on the website about that. So I'm not going to go into that today, but it's much better to measure risk in ATRs. And this indicator that we have here called Remek converter, actually it's part of this indicator pack, does just that. It translates proper risk measured in ATRs into dollars. First and foremost, understanding, like think of the flower shop or the restaurant or the flower or the taxi driver, whatever. Think of what is the actual risk in your trading, and be comfortable with the fact that if you have done the homework, then the next losing trade is a pre-calculated overhead in your annual trading business. And this is nothing really worry about. Of course, you will have to worry about if things get out of hand and you stop following your plan. That's a problem. That's an emotional, psychological, discipline problem, but it's not a mathematical problem. If you have done the math, then a losing trade should not be seen as a risk anymore. That's a big step towards success. And then we have to think about how to manage the risks that are real risks. And we have a list. We had a list of that in one of those slides, and probably you can put more on the list. But again, just note, a losing trade will not be on that list, not on the market risk side and not on the business risk side, because it's pre-calculated overhead like paying for electricity. And probably the biggest challenge for any trader is that we need to learn to think in probabilities. That's a skill, certainly true within our trading business. I'm not saying it goes for every area of life, but within our business, we have to think in probabilities the proper way. And we have to make sure that those things which are quite unlikely but disastrous cannot happen to us, or if they happen, we have a way of managing them. So I'd like to thank you for your participation in this quick run through. Before we get to the specials, of course, I do want to show you the product itself in NinjaTrader, because we have Ninja running here. So this is our Remek Momentum Pro Bloodhound system. Here we go. And we have a Blackbird strategy manager we call Remek Momentum Pro, enable the system. And now, you know this process already. The algorithm itself is black boxed, so that's proprietary. The trade management engine, which is in Blackbird, is completely customizable. You can just click on order settings, and I'm sure all of you are, if you're familiar with Blackbird, you know what I'm going to show you here. Here we go. This is the familiar interface. This is the factory setting with 3 contracts and certain stop and target values and certain logic to trail the positions. But you're most welcome to design your own, come up with something better or something that fits your situation better than this factory setting. But nonetheless, this is something that you can easily start with. And also, it's a good introduction to learning Blackbird. Blackbird is a fantastic product. And all these little rules that I included with the product, if you just have a closer look and understand the logic, it can really help you and propel you in your own work with Bloodhound and Blackbird to design your own systems, or to take or not take any ideas that you might find here. So this is just a sample strategy or trade management rule set in Blackbird that takes care of 3 contracts, one of which is a runner. So you will see that the third contract doesn't have a profit target. We are ready to go. I can enable the system. Right now, I'm on the Australian dollar on a 5-minute chart. And these are my signals. I can switch on to, of course, any other bar type or time frame that you want. And I can also switch to a different instrument. And I'm not going to go into too much detail about all this market scanner because that's not the topic of today's presentation. But you can see the setup signals and sometimes even the trigger signals here and some other data that is important for us. So right now, for example, this is a 4-hour time frame, we have a long setup on the Canadian dollar. This at this point is still interpreted as a bull flag, so a long setup. Probably when we touch the lower Keltner, this long setup will remove itself because the setup is no longer valid. I can show you just another example. Let's look at the Japanese yen and then we can call it a day. But this is a short setup here. And why do I have a long setup a couple of bars before? The reason for that is because the short here, shows the last bar, the current state. This was 3-4 candles ago. And as we know, the arrows, they stay on the chart. So they're sticky. You see, they will stay on the chart from the past. This was a long setup, but now we know from the market analyzer that it has failed. And now if anything, then we're looking for a short trade. That's a topic for another conversation, quite interesting, but let's leave that for another day. This is the product that I'd like you to know about and perhaps even consider it for your trading business as a tool on your desktop to be available for you if and when you need it. You will need Bloodhound and Blackbird to run this, but luckily, give me a second, we have some specials today in the form of a coupon code, Remek Shark Week 2022. Just enter this coupon on these links for all the products itself and the premium if you're interested. That's a nightly service. You can check it out on this page. 33% off this week. We have fantastic bundles. And I'm going to highlight the fact that we have in cooperation with Shark Indicators. Now, feel free to look around here. And if something is missing from your arsenal, from your toolbox, Shark Indicator product or Remek product for that matter, then I think this is a good time as any to get a great deal on these bundles. So thank you very much. And I can see some questions here. So let me Coro trend with Bollinger Bands. Hi, Rochester. What is your question actually? Let's see live action on charts. Okay, this is live action. The market is open. So I'm trading a 5-minute chart. The 6J may be a little slow, but let me see if is there any market you'd like to look at specifically? You can look at this list. These are the 20 or so instruments that I follow. If you'd like to look at something, then let me know. I'm just going to stay on the ES right now. And let's try to see a trade in real time. Probably just switch to a small tick chart, a very small chart, so we can get some triggers here, some signals. Looks like my chart is still updating. Okay, so I'm going to switch on the system. Blackbird is running right now. And 5-minute is a little slow. How about, I just want to get a signal right away. So how about a 250 tick on the ES? That's a pretty small. Just as an example, okay, this is a very, very small chart on the ES. I would not trade this time frame in real life, but just to get some signals and how the system works under Bloodhound, that's a very good example. So you can see that we have short signals and long signals, blue and red. Those are automatically calculated for you. And that will result mathematically, no other way to do this, no other possibility. My stripes, Bloodhound stripes, and the Remek signals will be in the same position. You see, when there's an arrow, there's a stripe. Beautiful. Okay, so now we are along with 3 contracts. And our trade is automatically managed with these settings. Target defined in ATRs, one target open, that's the runner. And then initial stop, two kinds of stops, of course, initial stop and then the trade management stop, which can move and does move, and based on these rules. And just a little bit of detail, if you're really into Blackbird, you will notice that this only has 3 rules. That's the first contract. That's 2 ATRs away. When the first contract is hit 2 ATRs away, then from that point on, we only have 2 contracts left. The second contract will have new rules, 2 new rules which did not exist for this contract, but this contract, when these new rules come into effect, that contract had already been hit, so it's not on the market anymore. And then you see that the third contract still has new rules, because when the third contract, the runner is being managed, hopefully, is after our second contract at 4 ATRs is taken out. So you can see that we have 3 rules, 5 rules, and even more, 8 rules. You don't have to do it this way. You can keep it more simple. Feel free to play around. You can simplify this. You can remove rules if you want. But these rules, the bottom line is that these rules will manage your trade, your position in an objective fashion based on your rules. Now, what's fantastic about Blackbird is that I design my rules on Saturday afternoon over a good coffee, on the patio, whatever. I'm not under stress. That's when I design my rules. And I save them. And come Monday, I get on the market, I enter a trade, I don't change my rules. In the heat of the moment, when I'm compromised, when I'm not logical, when I'm emotional, I'm liable as a human being, and I'm liable to screwing it up, basically. So that way, I ensure that the rules which I mathematically validated that work when I was objective, those are the rules I'm going to use when I'm actually entering the battle. Of course, nobody ever is going to take all the signals, whatever the time frame. Nobody's going to take all the signals. You have to be a little discretionary. You have to do a little thinking. So as far as I'm concerned, I do have a trading plan, and my trading plan says, and your trading plan could be different, is that whatever is my trading time frame, I always want to go in the direction of a higher time frame trend. My rule is that I only consider a long entry if the higher time frame is also in an uptrend. That's when I want to join this uptrend. You can even say that I'm actually trading this trend, but I'm fine-tuning my entry on the lower chart. Whichever way you want to phrase your words, the result is the same. You're entering on one time frame at the best possible moment, which is calculated for you by the algorithm objectively. It's math. Doesn't make a mistake, doesn't get tired, but I only trade in the expected direction of the higher time frame, and in which case we have a complex bull flag, so I'm expecting a move to the upside. Let's say that this could be my way of thinking if I really was trading this, but in this situation, this is just an example. So any particular questions about this? You can display this in monetary figures or percentage or points. And again, it's a great product, and it allows us to, by having this, the brain here, it's just my style of trading that I follow 20 or so instruments. But if you just specialize in one instrument or maybe 2, that's perfectly all right. So thank you very much. I'll stop here. I really appreciate your attendance and your attention. And sorry if we went into maybe a little bit more details, but be mindful of these excellent specials. This is a good time to grab the deals. If you're into Bloodhound and Blackbird, definitely the bundles. They're all here. And feel free to browse around. We have great material, hopefully, on the website and other services, which you're welcome to explore. In the meantime, look at this. Beautiful example. I got lucky here, guys, because this trade actually works. So it gives me an opportunity not to brag because the entry was random. So, but to demonstrate the trailing stop, you see the second contract has been hit, and now we are running. This is now the runner, no target sitting up here, and we are trailing it. And our trailing stop right now is within our entry which means that in the worst case, we're going to make some money. So this is now trailing our position from behind, and we are within our entry. Again, thank you so much. I'll stop right here and let me know if you have any questions or anything that I forgot to mention. And I'll just put on the page of our presentation here. So just in case you want to jot down the coupon code or anything, here we go.